Welcome back. We are busy with Class 7 investments. The next unit that we'll be looking at is Unit 3.5. We will be discussing shipping containers as an investment. Shipping containers are one of the least understood alternative investment opportunities. Because of this, and because of the loose regulations surrounding it, many people believe it's a scam. However, investing in shipping containers can be very profitable. To help you understand shipping containers are large, high quality steel drums that transport goods worldwide via sea, rail, or land. Due to the financial restrictions of managing and owning a fleet of shipping containers, a leasing industry has emerged. Investors may now purchase their containers and pool them with other containers in a fleet. Professional company pays a rental income to the owners of the containers that manages the fleet. Income is paid quarterly and may be remitted offshore. Since this does not form part of the annual 10 million offshore allowances, the investor can invest more than their 10 million allowance offshore. What is a shipping container investment? A shipping container investment is an alternative investment where an investor, that's you, invests in shipping containers. You purchase a container and then turn around and lease them to the shipping companies. Every month that your shipping container is used, you make money. Because shipping is big business, many investors see this as an investment opportunity with significant return potential. However, many investors view this as a confusing and somewhat inappropriate investment. To alleviate these factors and to make the market more accessible, brokers fill the role of acting as middleman between you and the shipping companies and manufacturers of the containers. Brokers are paid a fee for their services, and then they help you locate and contract with the shipping companies. The broker job is to help you locate the shipping companies, which can be difficult unless you are familiar with the shipping business. Then you had to contract with them, get in a sales rep at the shipping company, take a purchase agent, and possibly account for negotiating a personal contract for leasing a container to the company. And that's just only one company that you are dealing with. You would want to diversify your holdings, so you must renegotiate with each company that you want to rent the container to. The broker simplifies this process by building an economy of scales for you, negotiating with various shipping companies, and then letting you plug into the system of pre-negotiated rates. The shipping container industry is a mock banned industry because shipping containers demand is so high that many brokers offer multiple investment options, including fixed interest options above 10%. The high returns make some investors skeptical, but the demand drives the high fixed percentages. Shipping companies must fulfill shipping contracts. They cannot ship their goods without shipping containers. Unfortunately, demand for containers outstrips the supply, and it has been that way for many years. Investors provide container liquidity for the shippers and in the process drive up lease rates due to the demand not being able to match supply. Like any other market where supply is choked off, returns favors the investors. Most brokers have a low buy-in threshold of less than $100,000, making it accessible to many, but not all investors with reasonable net worth has this kind of savings. What's the cost of investing in shipping containers? Investing in shipping containers does incur several costs. A positioning fee is charged to cover shipping, wharfage, insurance, storage, and other incidental costs needed to place the container at the point of first release. A levy covers the maintenance and refurbishment of shipping containers. This levy is a percentage of the gross income. Shipping containers is also insured against eventualities while in use, and this cover will depend on its replacement value. However, different shipping containers have different cost structures, and one must be careful that one is a company comparing like with like. What's the benefits of investing in shipping containers? One of the greatest attractions of investing in shipping containers over and above their foreign currency income is the effect on taxation. As a tangible asset, containers are subject to wear and tear. It means that there is a 20% straight line depreciation allowance. For an investor to qualify for this deduction, the lessor of the container must, number one, accrue an amount of money from a source within South Africa, and two, be a resident of South Africa or be a partner of a domestic company. When the container is resold, the receiver can recoup any tax deduction. The yields are taxable. Gearing for the purchase of the shipping containers is also tax deductible. Investing in shipping containers can be a costly business. The initial costs are high, and container operators, financial intermediaries, and administrators take a slice out of the gross yields. Benefits of investing in shipping containers. Part share scheme in shipping containers are even more expensive. However, as we've stated, can be expected to have a working life of at least 20 years, and these containers have a high residual value. Income does vary, but there is usually a net yield of 8 to 10% or 11%. Also, the demand for leasing shipping containers is increasing as 44-gallon drums are being replaced. Some more advantages of shipping containers. Due to its nature, the shipping container is subject to wear and tear, as we mentioned earlier, and the wear and tear can be written off for tax purposes and offer the tax investor a 20% straight line depreciation. If the investor borrows money from a bank to purchase the container, the interest paid on the loan may be treated as a deduction when calculating the tax payable at the end of the tax year, and the shipping container offers the investor a quarterly dollar income. What are the disadvantages of a shipping container? The initial purchase of shipping containers together with the initial fees can be expensive. The investor is reliant on the fleet manager to utilize his container. Even though the containers are pooled and the investor draws an income regardless of whether his specific container is used, utilization of the container may be low, which in turn may lead to a low income payment. If we look at the rands in dollars, the investment does not form part of your foreign exchange allowance permitted by the Reserve Bank, and there is no restriction on the amount of rands that an individual company or trust can invest. The revenue earned on shipping containers is paid in US dollars, which the individual investor may elect to deposit in an offshore bank account. Companies and trusts are required to repatriate the income in rands. The investment may be financed in rands, and the finance cost paid in rands. This investment in a growing international market is an excellent diversification tool for investors seeking to hedge a portfolio against uncertain South African economic climate and future depreciation in the value of the rand. Let's have a look at the actual return for one unit. Note these figures could vary from manager to manager. This is a distribution statement for the quarter ending 31st of May, and let's say it is for the year 2021. Let's say your gross rental US dollar payout is 5.20 and 14 cents. Your refurbishment, 5% of the gross rental is 26.01. Your management is 22% of the gross rental, which is 11703. Insurance and maintenance works out at 159 and 91. And your positioning cost 12.65, which will give you then a net of 204 and 54. Let's say the exchange rate is 7.6081. That will then give you a rand payout of 1,556 rand and 16 cents. Annualized return will be 6,190 and 81. The investment you've made is 116,800, and your percentage return on that investment would then be 5.30. Let's have a look at the tax position. And here we've just given you an example of a tax position for a container that we are showing below. And that will be for the tax year ending on the 28th of February. And let's say that's for the tax year 2022. Let's say the date of purchase was the 1st of March, could be 2021. The container type was 24.001. The number of containers that we are working with here is one container, and the total cost in rand was 159,500 rand. The revenue received for the year ending 28th February of, let's say, 2022, quarter one, in May, you received 1,902 rand and 90 cents. Sorry, and 30 cents. In August of the same year, you received 1,940 and 18 cents. In November, you received 1,310 and 21 cents. In February, you received 1,622 and 16 cents. And the total revenue received for the tax year is 6,774 rand and 85 cents. The depreciation on the investment is 159,500. Depreciation at 20% on the 159,500 for 12 months is 31,900, less your revenue of 6,774 and 85 cents, less the deduction before interest charges of 25,125 and 15, interest paid on the loan of 60%, which is 14,355. That will give you a taxable loss of 39,480 and 15 cents. So what is your tax position? If the investor had geared the investment in the shipping container by borrowing a portion of money required by the container, the taxpayer would be able to also deduct the cost of borrowing from future container income. Recent amendments to the Tax Act restricts the deduction of the loss to income earned from the containers. The taxpayer may no longer deduct this loss from a container income. Moreover, the South African Revenue Services will add the amount received by the investor's taxable income when the container is sold. The amount added back cannot exceed the amount claimed as a depreciation. Right, shipping containers offers two major advantages as an investment. Firstly, they provide an investor with a quarterly dollar income. It can provide a hedge against a depreciating rand. And secondly, they provide an investor with a legitimate means of reducing tax. However, as seen in the table above, the actual return for the quarter of the year ending January 31st was only 5.30%. The return is improved by the tax loss that can be claimed. However, after 5 years, this depreciation can no longer be claimed. Moreover, the South African Revenue Service will add the amount received to the investor's taxable income when the container is sold. The amount added back cannot exceed the amount claimed as a depreciation. Right, what benefits does shipping containers offer? An investor must also realize that the price will have dropped when he comes to sell the container. For example, containers purchased in 1993 were resold for 38,000, while those purchased in 1995 were resold for 40,000. Now that South Africans can invest overseas legitimately, the popularity of shipping containers as an investment is likely to diminish. What's the risks of investing in shipping containers? Like any investment, there are risks. The shipping container broker loves to tout the high returns, but they rarely tell you about the liquidity of the containers. Unless your broker specifically provides for the resale of the container, it is tough to sell off those things. Returns are not guaranteed and dependent highly on shipping industry. Even when shippers sign multi-year lease contracts, companies can and do go bankrupt. And there is no recourse if a company cannot pay its bills. Finally, the broker itself can be a disadvantage. While most brokers are honest, some in this industry are not. It would help if you verify that your broker is acquiring shipping containers for you. Ideally, you want to see the container, verify it exists, and then know that your container is being used or are being used in a lease arrangement. Otherwise, a broker could hypothetically draw up phony paperwork and sell you a bill of goods. Verifying containers is not always easy if you are unable and unwilling to inspect them yourselves or have a third party audit them visually. In conclusion, if we conclude on shipping containers, purchasing a shipping container is an investment in a secure and growing international industry. The shipping container is purchased and financed in South African rands and earns revenue in US dollars. Income can be deposited as an offshore bank account or offshore investment. The investment is extremely tax efficient. It is approved by the South African Reserve Bank and the South African Revenue Service. Thank you so much for attending this session on shipping container investments. The next session that we will attend to is on hedge funds. We will discuss hedge funds in our unit 3.6, which would be our next session. Thank you so much. I'll see you then in the session on hedge funds.